Okay, thanks for tuning in to Keeping It Real with Nycole, all things real estate. And today we have the pleasure of Mr. Bob Szalay and Mr. Brian Novak with us from CrossCountry Mortgage. Welcome, gentlemen.
Great. Glad to be here.
Thanks, Nycole.
So you guys have put together quite a good team here with Brian, Bob, Jeff, Mimi, Caitlin, and Philip. And you are our preferred lender for sure. You guys are on site with us. What I like most about working with you guys is your business model is kind of similar where mine is, where it's customer forward. Brian and I do a lot of work together, so he knows I'm always looking out for what is the best fit for which program for this specific buyer. So he does a good job with that.
Great.
I think, Brian, we probably closed about 20 transactions together in the last 2 years.
Yeah.
Okay.
Yeah.
And Brian, one thing the clients say about you is they like how you answer the phone and you stay on top of everything. So myself personally, I have Brian on speed dial. 1-800 Brian help me. It's the middle of the night, and he answers. And sometimes I don't even send it because I know he'll answer. I don't want him to till the morning. So, but let's get started with the number one question on everybody's mind: what's happening with the market? Who would like to take it?
I could start. What's happening on the market right now is, yes, interest rates are up, but just take in mind, we tell the customers the same thing, is even though interest rates are up, you're not married to an interest rate, you're married to the house. So we know that the home that you are going to purchase, that the rates, when they go up, they eventually do come down. So just take in mind, when the interest rates were in the threes and everyone was buying, what did you pay for that house? And most of those houses went for $30,000, $40,000, $50,000 over asking price. So if you really take a good, hard look at it, even though you got a 3% interest rate, what'd you really pay? 6? I mean, when you boil it all down, today
That's
houses
a good way
are
to look at it.
Yeah, that's really the best way to look at it. So that's why you don't want to stop looking for a home. So even though you paid 3%, you're really just paying more. You paid 6.5%. So even though the rates are in the upper 6s, lower 7s right now, you're not paying so much over price. You're pretty much paying that price. And in some particular cases, you're getting also seller concession help towards closing costs.
Right. We're getting seller concessions. We're also seeing prices coming down slightly. Right. No more 30,000 over ask.
So anytime a customer will call me and say, well, when's the best time to buy? When you find the perfect house for you now. It doesn't matter about the interest rate. So that's how we overcome it. When the customers do call us and ask the questions, there's not very many things that we can't overcome, but the customer just has to understand it in a logical sense, and that's what they understand more, because they go, well, no one ever told it to us that way. That makes sense. So now they go back out and start looking again, because right at the beginning, we had probably 40, 50, 60 pre-qualifications in our pipeline, and 50% of our realtors would call us up and go, I'm going to lose this customer, I'm going to lose this customer. For what reason? And that was the reason, because of the interest rates. So then we made those phone calls, and out of all those phone calls, we were able to save almost 95% of those people that said, you know what, I'm going to keep on looking. Now the market is we're just a little bit short on houses out there.
Yeah, okay. We can always use houses.
And to piggyback on what Bob was saying, I tell my clients, the best time to buy a house is when you're ready. And the best way to be ready is to get plugged into a great realtor like Nycole, great lender like Bob and I, frankly, because we can help you be prepared. We'll take the time to understand what your needs are and stick with you through it to make it happen.
Right. Yeah. So, Brian, do you see interest rates? You project them coming down soon, or when? How much? What is the projection?
Man, that is such a great question.
Crystal ball question?
I've been looking all over the place, and there are so many different opinions about what's going to happen with interest rates. Some people project that they're going to be coming down over the next, maybe 2-3 years. Some think maybe a little sooner. They think maybe the rates are going to continue to climb a little bit before, we see the break. The overall real impression is that mortgage rates typically follow economic data and inflation. And as those things cool and come down, we'll start to see the mortgage rates follow. So people then will say, well, I'm just going to wait and time the market. I don't think that that's a very wise approach, frankly. I think, like I said, the best time to buy a house is when you're ready.
Right.
Yeah.
Right. I do agree with that. for our first-time home buyers, the education part is huge from both the realtor and you guys. So there are 4 real parts to the payment that you're giving. Can you want to talk about what those parts are? Like the mortgage, the interest.
As far as principal,
Yeah.
interest, taxes, property insurance.
And the PMI.
And sometimes mortgage insurance, and then sometimes, depending on the property, homeowners association dues. Yeah.
So we've had recently a client have total sticker shock. They were thinking their mortgage was going to be $1,000, but when you added in the taxes and the PMI and the principal and the interest, like, where does this payment come from? So it's just something to be aware of, that there are 4 pieces to it. Mm-hmm. Okay, and then what changes have we seen with PMI lately? We've seen a couple.
Well, I could take that one. Yeah. So PMI, what you're going to see is, I just had a meeting yesterday about this, was FHA has come down about 50%, the payments are. So you're going to see a lot of what happened with the PMI is they want to become more competitive because they're seeing a lot of the loans going conventional. So FHA is a wholly different bank entity. So what they did is they cut the PMI down. So it's like 50%. So you'll see the advantages. You're going to see a lot of loans coming across that are customers that are FHA qualified. And a lot of the realtors, the listing realtors, most of them know that FHA isn't as tricky as it was before because they're only looking at safety issues. Pretty much looking at the safety issues are the big key thing.
And peeling paint.
Yeah, peeling paint's a big thing. Electrical GFI, the railings going down the steps in the basement, the railings going up the 4 steps in the front. That is what they're looking for primarily. So when we educate the agents are already looking at the house going, okay, what is FHA going to kink and what can I get fixed before the appraiser goes out? That's the big key thing. And if we tell our agents to do that ahead of time, it saves the customer a reappraisal fee because it's a $200 reinspection fee. And you cannot get around that. It gets charged right on there, and it won't clear unless there says a reinspection, and you can't waive that like we did back in the early 90s where the guy would say, wink, wink, wink. I went out there, I took the pictures, and he's not charging a reinspection because he's doing us a favor because it's my Uncle Tom, Uncle John, Uncle Tom, whatever. So that's why that gets taken care of in it, but they have to show the $200 on there.
Okay, so I understood that. That means if you have your appraisal and there are items flagged FHA, and the FHA is required to come back and clear it. And that's what you're saying. There's a second fee for that. So that's happened to me a couple of times. So definitely being proactive if you're going to accept FHA. With that, I think FHA and VA both get pretty much a bad rap in our industry. Like it's a lower quality loan, which obviously isn't the case. So, Brian, do you want to talk about FHA loans and why they should be something a borrower is interested in, maybe to compare it to a conventional?
Sure. Well, first of all, they offer a low down payment to all of their borrowers. So you're not worried about, coming in and having to put down the 20%. Of course, PMI comes into play into both of those situations. But FHA does give opportunities to more buyers in situations where maybe they've had recent credit issue. Maybe they're a little bit short on the cash to close, and so
savings.
A lower down payment, can help them. Yeah, low end savings. Other situations where FHA is benefit is just basically giving a hand up to more buyers to help them come off the sidelines and get into the market.
Okay. And then, Bob, the VA portion, I always tell people, you served, you earned it, use it. Mm-hmm. What are the benefits of a VA loan?
Well, I'm an Air Force veteran, so I push any of the VA loans. Benefit is, of course, on a VA loan that you don't have to put any money down. It's zero down payment.
That's huge.
Big advantage on it. And then the other thing, too, is debt ratio. So even though the debt ratio may be out of whack at 60 or 70%, debt ratio is based on what your monthly payment is, what your debts are, and your income. They don't want you to overspend. They don't want you to be way out of budget. So VA has a calculation that they work on based on what the income is in the family and how high they'll go. And then if they have some good extenuating circumstances like a good money reserves in the bank, credit, they'll allow you to go above that normal scope of 56 or 50% to 56% and go a little bit higher than that. So that's the other advantage also with them. Plus the other thing too is if the appraisal comes in short, and this is huge. So let's just say the appraisal, they're trying to purchase us for $250, but the appraisal comes in at $230. There's another department that will relook at it and possibly override the appraiser and give them the $250. So they'll take a different look at it. They'll look at the comps, but I've seen in a couple situations where the appraisal department over at VA overrid the deal and gave them the $250 that they needed to do the deal. The customer had great credit. They had plenty of reserves. Their third home, they overrid it. They did the deal. We had no issues on that. And we have a direct contact, us personally, to the veterans, VA, and all those departments out there that we're able to override or take a look at it a little bit differently and make those phone calls direct. So that's how we can save time rather than wait 2 or 3 weeks like most people do. Mm-hmm. We've been doing so many VA loans that we have a little bit of a shortcut that we can get that a lot sooner than most.
So what about the VA loan? Doesn't the seller pick up a portion of close and there's the pest inspection?
The pest inspection right now doesn't have to be picked. Either one can pay it on there. Didn't we just have that on that other case where they didn't have to pay that? They'll pay. They changed that just a few weeks. Not a few weeks ago, a few months ago. They changed that.
And what about the seller portion?
There's a small portion to do that, and it's really just a couple $100 difference in here. It's nothing big. Now, here's the plus, though. So let's just say you have seller concessions. You're asking for them to help towards closing costs, and maybe it's only $1,000. Any of that amount that the seller is supposed to pay for it comes out of that seller concessions. So they really don't see it. They already gave $1,000 seller concession. So they'll pull from that portion right there. Instead of grabbing it to sell. So it's really not any additional cost in there, but more of a benefit.
Okay. So flipping back to FHA, what if a buyer has an FHA loan, but there are sold as is and no repairs made, and they want to improve the property? Is there an option for that with FHA?
Absolutely. There's definitely an option for that. So FHA offers a home renovation program. It's known as a 203K. And that 203K can be used by buyers as well as those looking to make renovations to their existing residence. So it's not just a buyer's program, but it could also be one for someone who is, in an existing home and wants to make renovations. But for buyers, it's very attractive because, they can get the money rolled into one loan, FHA insured, that's going to, give them the renovations and make the property, their own, so to speak. Yep.
Well, that's pretty interesting because we do see a lot of right now homes that are on the market that are estate sales and definitely needs work. I have one now. I have two actually that need a lot of work, and we offered it to FHA specifically knowing about that program. Otherwise, we would have just exempted it and said cash only.
Right.
Okay. So for first-time home buyers, there's a plethora of options for them to pick. So how do you guys go about determining which program is best? Is it down payment assistance? Is it a 2-to-1 buy down? Is it seller concessions? How do you guys decide what program is a fit for a specific buyer?
That's a lot of work.
You have to. The biggest thing is how much money they have in the bank, or if they have anything in the bank. So we have to decide whether they have to go down payment assistance. And the interest rates are a little bit higher for down payment assistance in there. And Brian's the expert in that because he actually does all my down payment assistance. I refer them to him because he knows the programs back and forth, and he handles so many of them. So Brian handles it, and every customer is ecstatic. But when we look at the customer, we look at the overall picture. We need to know. Excuse me. We need all their documentation. We need to know how much money they have in the bank. We take a look at all that. Then we decide which program is going to be the best. Sometimes what happens is we could talk to a customer and maybe they don't really need the down payment assistance. That a relative is going to maybe give them a gift letter. So we'll take a look at that and kind of decide which program is the best for them. And most of the time, like I said, when we have these customers, FHA is really a great program for them because we can get seller concessions, and the debt ratio, we can go up to 56.99 on the debt ratio on that too.
Yeah. So, and just to kind of talk a little bit more about that with the down payment assistance and making decisions, down payment assistance is available on a conventional loan, an FHA loan, a USDA loan, a VA loan. All of those loans can qualify on some type of down payment assistance program. So they each have their own unique qualifiers. Maybe it's a credit score minimum. Maybe it's an income limit. Maybe it's a debt ratio threshold. So you're kind of taking this borrower and you're looking at their profile, and like Bob said, the documentation is super important, because the more we can solidify what a person's individual situation looks like, then that can put us down the road to make them offers on programs. For example, the one that you were talking about earlier that you and I are personally involved in, I was able to offer them an FHA program, a conventional program, and a down payment assistance program. And each one of them had benefits. So this particular couple, they have money. They're looking for a house that may need some, a little bit of repairs, trying to make it their own. And so an attractive part for them as far as down payment assistance program would be that can give them additional money that then they can keep in their bank to help them make some of those repairs and assets. And then it just kind of comes down to, what their appetite is, what they really want, and how we're meeting their needs. But knowing them as best we can gives us the opportunity to do that. And that's why my first comment was a lot of work, because you really do have to kind of dig in and really get to know and understand them as well as your situation before you can really make a solid recommendation.
I always tell them, tell me everything. Just lay it on the table. There's no judgment here. We got to know it all so we can do the best by you.
Yeah.
So for sure. Let's talk a little bit about the mortgage process. So when you get an initial client and they call you, you guys have your initial conversation, what comes next as far as like the application and the timing that it takes?
Yeah. I do it two different ways, kind of a two-step process. So I will have initial conversation with them and talk about, first of all, why do they want to buy? I think the reason that someone's motivated to buy is important as anything else. Why do you want to do it now, right? Is it your time? Okay, it's your time. Great. So then we'll talk about the big three: income, assets, and credit. Credit being number one, gets you in the door. Income then helps, what can you afford? And then, assets takes us in the other direction of what type of programs might we be looking at for you. So we'll talk. Typically, I'll send them a link to an application if we haven't been able to start it on our own. If they're tech savvy. If they're not, I'll spend some time with them and get it started.
You do. You go meet them in person.
Yep, I will do that. And then in addition to that, I'll send them an email that will ask for the documentation. We'll talk about the documentation that we're going to request, that it would be necessary to be able to complete it all, in addition to a credit report. So, and Bob, if you have anything to add to that.
Well, Brian hit the nail on the head. The key thing is taking that application. See, when we take that application, then we get to know who the customer is. How many children do you have? How old are your kids? When we know that and we know what the motivation is, what happens is this. Now we got to know the customer. They told us some of their personal stuff. And a lot of customers will tell us things that aren't on the application, but maybe some personal things that will help later in the process.
Exactly.
So then when we get that all put together and we get passionate, you could see us when we take the application, we get excited. We love doing this. We love talking to customers. And when they hear our passion and voice compared to maybe a local lender like Huntington or Fifth Third Bank, who are just basically order takers, but they're saying they're getting a better rate. But are you really getting a better rate? Are you really getting better closing costs? When you're not really getting a true service, we take all of that and then we use it later. So when you allow us, when you finally get the deal and you write the contract and you go, hey, now we're up against 5 other offers. And Nycole says, I need you to call the listing agent. Then we get into action. We take our notes that we had on that file and we call the listing agent and we say to them, hey, the reason we'd like you to take our offer is not only do I have a strong and credible buyer that gets us stuff within 30 seconds. You've ever had a customer that just shows up on time, tells you they're going to do something, and within 30 seconds it's all done? I have that customer. It's this customer. Not only are we going to guarantee we're going to close on time, that customer, their little daughter, little Susie, she already chose the bedroom in the front room left to the right of the kitchen.
She wants the purple one.
That's the room she wants. She's already chosen that. Now what we're basically doing is we're loading the lip of the listing agent. We're telling the listing agent a story so they can repeat that same story to their client to say, we should probably take this offer. It might not be the best offer, but you lived in a home for 30 years, and I know you really want it to go to a good family. This is the best family to give it to. And that's why they buy our deals, because we make that call. Do you think Huntington's going to make that phone call? Because they're not working on Saturday and Sundays.
They're not.
Other than the banking. That loan officer's already sitting at home. He's not motivated. You know why? Because he gets paid per hour whether you close or not. It doesn't matter. We don't get paid per hour.
Nothing against Huntington.
Yeah, nothing against Huntington, Fifth Third Bank, or any of the local banks out there, but they are not hourly wage. They're not embedded or they're not motivated to close you because it doesn't matter to them. They're getting paid no matter what. Us, we only get paid when the loan closes. So whose side are we on? We're on your side. We're going to work as hard as we possibly can to make sure that loan closes.
Right.
So that's why the application is so important. Because we have customers that we talk to on the phone. They go, they didn't even ask me half of these questions. And I didn't give them any documents. They just based it on my credit score. And
This is an ongoing problem that
absolutely.
I see. Ongoing problem. We have a pre-approval for this amount, and then it turns out they have not even submitted income documents.
Exactly.
It's not worth the ink on the paper it's printed on. And this is why I recommend you guys.
Thank you. So I just told Brian the story of the other lady. She got approved for $250,000, and her husband knows a friend that knows me through another friend, and he called me. He goes, hey, you got to help me out here. He goes, I've been on unemployment. He goes, my credit's not as good, but my wife's got a 750 score. She just got approved for 250. I go, wow, she got a 750 score. That's great. I go, what's your real question? He goes, well, she makes $13 an hour and works 20 hours a week. How the hell she get approved for 250? I go, what bank is it? She told me, local bank. I go, because they don't check your income. They only go by your credit score. And then on the day before close, they say these simple words to you, oh, we're sorry.
They do. You would have qualified if you met all of these parameters, but you don't because they're unattainable. And so really your interest rate is going to be here. So they get you on the hook. And this is what I try to explain to my customers. They get you on the hook, but you're not comparing apples to apples. And honest to God, when I literally call Brian at 11 o'clock at night, I can't call Huntington. If something goes bad on Huntington again, I can't call a local bank. I love Huntington. I bank with Huntington.
A lot of people do.
But I can't call at 11 o'clock at night. I can't even call on the weekend. And it's within the parameters of their hours. And I need it sooner than that. We're in a competition. I need something now. And that's what you guys are great with.
Great. Thank you.
Thank you.
Excellent. I lost my computer here. Okay. At what point do you hard lock a rate in? So when you're working with the client and they're shopping, you've given them an approximate rate, approximate PMI, which is close, approximate insurance. At what time do you lock that baby in?
Yeah, when they're under contract.
Under contract.
Yeah.
Okay. Yeah. So it could flex a little bit depending on what happens with the rates.
Right.
Yeah,
from day to day.
That's true. And I'm sure Bob does it the same way. Well, I'll constantly tell them, this is an estimate. Here's where it is. I'll even go as far to tell them what the pricing is for that rate for that day. This just to prepare them for the event of, hey, we might be paying a little bit for this. So.
The word we use, it's called expectations. If you tell the customer ahead of time what to expect, then it is not a surprise later. We give them the expectations. That's how we get control of everything, because we say, here's where your estimate is. I'm going to tell you what is going to happen in the process when you do lock. I'm going to tell you what, and we tell them what the rate is that day. Once you get the contract, we say to the customer, here's where we're at right now today. I can lock it for, in the amount of days, depending when you're going to close, 30 or 45 or 60 days. We prefer 45 days at the longest. And then we tell the customer the payment at that particular time with the estimate of the homeowner's insurance. Everything else is going to be more exact. Plus, because we know the address of the property and we know the exact taxes.
You know the taxes.
And we give them that. And then we say to them, do you want me to lock the rate right now? As soon as they give us the go, then we lock the rate, and we disclose the file normally in the first 24 hours, and then we order the appraisal then.
That's
Okay.
right. Yep.
You agree with that?
Yeah.
So typically, what's the fastest loan you guys have closed?
Oh.
For me, 21 days.
21?
So I actually got a loan on a Wednesday. It was a 9/11 loan. It was a local bank, and they screwed up the deal. And it was a very simple screw up that I have no idea how they picked it out because the customer was a phenomenal credit score. Everything was right. They called me at they called me at 5:30 at night. I have 7:30 reservations for dinner with my wife. It's date night.
Oh, not date night.
So I go, okay, great. I got to talk to the customer. And she was a little bit hard-nosed to begin with. And I said, I need you to send me your paperwork. I understand the process you have, but this is what I'm going to need. And she goes, well, they didn't even ask me for half of that. And I just said, that's why they made a mistake. I want it all because I'm the only one that's going to be able to do what you are requiring me to do, which was this is Wednesday. They need me to close it by the following Friday. So we took the file. She immediately, after talking to her for about 45 minutes on the phone, shot all her paperwork over to me. I loaded everything into the file, put everything in there, got everything all ready. My assistant finished everything else. I took my wife out to dinner. At 10:30 at night, I finished the file, and my processor was set up for the morning to disclose it. We disclosed it, ordered the appraisal at noon, put a rush on it, which is an extra $200 to rush. Lady, we already told her up front. The appraiser went out on Friday, gave us the appraisal on Monday, and at noon on Monday, we got it clear to close.
Well, I would say that is definitely outside
That's
of the
the
norm.
fastest I've ever did it. But everyone in our entire team, which we have a phenomenal back-end team, phenomenal back-end team, all of them, all 6 of them, lined right up, and they go, we'll do this.
Excellent.
Yeah, and we close her the following Monday.
And that's customer forward.
Yes.
Yeah. And Bob brings up a good point. We can lay the groundwork and we can do all this work up front and qualify the borrowers and build those relationships. But without those people that are supporting us as the file moves down, I mean,
Yeah, we can't do
we
it.
wouldn't be able to manage that fast.
We
And
can't
they're
do it on our own.
fantastic.
Right.
I would say a typical close that we look for on our side as realtors is 30 days.
Yep.
Which we've never missed. I don't think Brian and I have ever missed that.
It's easy unless some kink in the file came up, and there could be a multiple things on there that is out of our control, obviously. But we want to close on time.
Right.
Yeah, that's our reputation on the line.
Yep.
Except down payment assistance, that's 45.
Right.
45 days.
That is a 45-day contract.
Yeah.
I will still push that to be ready sooner, but that's the expectation.
Oh, good. Let's close this next one sooner.
That's well, we can always hope for it. Now, I mean, our back support team here at CrossCountry Mortgage is they are outstanding.
Yeah.
So yeah.
So while the client's going through the process, I know I don't think there's a day that I don't talk to Brian ever, 7 days a week. How often are you talking to the client?
I will usually talk. Depends, but usually every couple of days.
Okay.
Yep. Every couple of days, I'll shoot out to them a message, a text, or.
And I always
some
warn them,
correspondence.
Brian's going to continue to ask you for documents till the day you close. When he asks you for a document, get on it. Mm-hmm. So why do you continue to ask for these documents?
Well, as the file is moving its way through, so we take the initial, we get all the initial documentation. We look for things to uncover, potential documents to support what they're telling us, whether it's income, whether it's assets, maybe there's child support involved, so we need, a couple other extra things for that. But then as it moves down the line, an underwriter actually looks at it. An underwriter is going to go through everything and they'll say, hey, you know what? Could you provide for me just a little bit more explanation on this item? And so that would be a reason to come back to sit for a document from a client.
Right.
Yeah.
I will say, working with the both of you, though, you could do so much work up front. At the point where I get the pre-approval, I'm like, okay, we have it. I never feel worried. And when I get documentations from other lenders with different clients, I don't have that same confidence. And I would say many have fallen through the cracks. And I either shift them toward you guys at the last minute, or the deal's done and we lose it. So that's really important, how much time and effort you put into it in the beginning, the research. So when you give that pre-approval, we know you're truly pre-approved.
Absolutely.
We had one, Brian, a long time ago when the husband couldn't even be on the loan in the end. But they went into their local bank and they got their pre-approval. They handed it to me. I submitted an offer, and then I started talking to them about it, finding out they didn't submit any documents. And as it turned out, we switched him to you. He couldn't even be on it. So it's definitely an advantageous situation for any buyer to use a qualified, licensed mortgage lender. Okay? And I preach that every day. Do it. It's worth it.
Well, you won't get a disagreement from us.
Yeah.
And people ask, is there a fee? Like, do I have to pay them to do this work? No, you pay it close. Yeah. I mean, sure, there's
The bank
fees.
pays.
Yeah.
Yeah, there's
Bank
fees
pays.
associated with your work, but they're not writing you a check and hiring
Right.
you to do their loan. Right?
That's right.
And that's a good thing. That's also a good comment you brought up about they're not writing us a check. So we always kind of talk to the customer, and we tell them, we are on the phone with you, and we're not seeing all the customers face to face. We always say the same thing. There's going to be no money exchange between you and I.
Right.
If anybody asks you to write them out a check,
There's a problem.
there is a problem. That's a scam. There's something's going on there. Any money that is going to transfer to for the deal is going to go to the title company. The title company that you guys picked as a party together, closer and buyer, you guys have. That's the title company you guys do. Those are the people who get it. Other than the third-party ones, which are our appraisal, the appraiser gets that. And then the other third party would be the homeowner's insurance also too, which they'll want to get paid for upfront for the whole year, the way that gets set up. Okay, even though they're escrowing later, they have no money in their escrow account right now, so they want to make sure that they get paid.
That does bring up a good point. So when you sign the contract to purchase the house, we kind of slide you over to the lender. What the client is going to expect is they're going to need to pay for their appraisal, and they're going to pay for their home inspection. Mm-hmm. And I don't know that everybody knows that. So that's something that I began disclosing up front. Okay, we're going to go under contract. These are the things you need to expect to have cash for in the next 2 weeks.
Mm-hmm. Right, and we do tell them that right from the get-go at the first conversation.
Yeah, that's our first conversation with, because there's no surprises. And they go, well, the bank never even brought that up to us. And of course, the bank didn't bring up a bunch of other things. So we go, our whole thing is I use the same word all the time. Folks, you know what? The way I sell, I don't want there to be any surprises at the end, do you? I mean, I want you to know everything up front. I'm going to give you these expectations, and I'm going to promise you I don't want to see any surprises, and I don't want you to have any surprises. And they always go, no, I don't want to. I had to buy a car. They told me it was going to be this, and it was something completely different. I go, we're not going to do that to you. You're buying a home.
Another thing you guys are good at telling the clients is when you go under contract for a real estate transaction, don't buy anything.
Right.
Don't buy a
Exactly.
car.
Oh, yeah.
Don't get a new credit card. Don't buy new furniture for the house and order a pool. Nothing. Everything needs to stay stagnant until the day you close, and then do what you want.
Mm-hmm. Exactly. Don't co-sign for your girlfriend's BMW.
Right. Don't do anything. It's definitely, it has to be a stagnant time. And I know you guys preach that. I preach it as well.
Yes. That's great that you do that, because most agents don't do that.
Oh, yeah. I've seen us get into trouble with that a couple of times. Then when the closing comes along, they don't close with you guys. They close with title. Mm-hmm. So
Yeah, that's right.
and that's going to be done only in person. That has not changed
Absolutely.
to a digital signature at this point in time.
It
That's
has not. They sign in front of a notary.
a notary.
Right.
Yes.
And we could do that if it's an out-of-state. Like we did a New Jersey couple just last week, and what we did was they said, is there any way they could come to our beach house and sign there?
Ohio Real does that at no charge.
And they did it.
Yes.
And exactly, Ohio Real did do it for us, which is absolutely great.
Yeah, they're great. They don't charge any fee for a runner, which is really a good perk. Okay, Brian, when a client is first connected with you and you need to collect documents from them, can you speak to what documents you're looking for to our audience that may be generating documents, starting to think about getting a mortgage, and what do they need to start readying?
Okay, yeah, that's a great question because it's a real important one. So typically we'll ask for the last 2 years of W-2s, 1099s, and or in some cases tax returns. We'll ask for your most recent 30 days pay stubs, the 2 most recent bank and asset statements, a driver's license, and a signed Social Security card.
Okay.
Now, depending on the conversation and the interview, like Bob was explaining, we may uncover some other things. So they may say, hey, I'm receiving child support. And then the question is, do you want to use that child support to qualify in your qualifying income calculation?
Or SSI.
Or it's Social Security, or it's pension income. So as we're learning those things, then we're going to change that initial list that we give them, which is the whole point of
The interview.
The interview, exactly. But in a nutshell, just to get out the door, it's W-2s, 1099, maybe tax returns, the bank statements, pay stubs, and a driver's license, Social Security card. Those are usually the
start.
standards. Yep, that's
Excellent.
right. Yep.
Okay. All right.
Well, can I add one thing, though? So on the Social Security card, there's a form that they actually sign right now, and they just recently said we don't even have to collect those at this particular point. But we'll ask for it anyhow. It just makes it a lot simpler. It's in the deal. But there's a form they actually sign at every single file right now. It's a Social Security form that they do. They sign on there. So if the customer says, I don't have a Social Security card, I lost it, no worries. We have that form that you're going to sign on the initial disclosure, and we're okay with it. So the driver's license is the key thing on there. And then we won't ask for the reason that we don't need full income tax returns is if the guy's a W-2 employee and he's been doing it for a long time. The only reason I may want
For a 1099.
1099s or those is if the guy has rental income, I need those. If he's self-employed, I need full income tax returns. Those are really the key things of why I actually need. If he's a realtor, which is I'm going to need your tax returns. I got to see what you did the last 2 years. And then we have a system that we run those through and then do the calculation of what the true income is.
Okay. So last opportunity, why cross-country?
Want me to take that, Brian?
Yeah, I do. You have more time in with them.
Well, why cross-country? Cross-country is the number one purchase lender in Ohio. We're number 3 in the country. Our reputation, we do about $54 billion in business a year. We have an outstanding reputation.
Just a little bit.
We pick up the phone when you do call us, and we will call the listing. Every one of us at CrossCountry will call the listing agent if the realtor asks us to do it. I love to do it. When you tell me, I get so excited about calling. I'm like, I can't wait. Because I hear the word no, and I'm trying to get them to say yes. I always say the same thing to my realtors.
He accepts the challenge.
Why do you get so excited? I said, you know why I get so excited? Because before my wife allowed me to take her out, she said no to me 50 times. I did not give up. All I needed was one yes, and I've been married it'll be 32 years. So cross-country, all of us have that passion and wanting to help the customer. We're all licensed. We're all certified. We do the continued education to show that. But we go above and beyond because we're trying to build a relationship. Not just do a one-time deal, a one-night stand. It's not about a one-night stand. It's about building a relationship with a customer. So when the customer calls us, and I want them to call me for anything, because I offer them my book of business. And you know what my book of business is? Just like any other cross-country real estate agents, our book of business is I've got a painter, I've got an electrician I can recommend, I've got this. These are people I've did business with, and I continue to do business with them because I've helped them on their mortgage, they've helped me at my house, or they've helped me with my electricity, my pool. I give them everything that I possibly have. So when we build this relationship, not only that we've made friends with this customer, we get invited to a wedding of theirs. I mean, you did a great job when a guy that you took care of 18 years ago says he's going to get remarried and move to Alaska, and he's going to buy a house, and he's going to call you. And he calls you, and you help him buy a house. And he sends you pictures of him and his family, or he tells you some struggles he may go through in his life. You know you've built that relationship because we're only on this earth for a short period of time. And at the end of the day, it's the relationships that you made that really makes you as a person. And that's how we all feel. That's our culture at Cross Country Mortgage. Every one of us thinks the same way.
That's the kind of culture the client wants to work with.
Right, exactly.
All right. Anything to wrap up, Brian?
How do you follow that?
I don't know.
I mean, really, how do you?
Thanks.
On a little bit more sterile or technical note to your question about cross country and why, the company is ever expanding the opportunities for us as originators to offer products to our clients. They're ever growing their internal processes and their internal teams to make our lives a little bit easier, to make it more friendly for the client, more friendly for us. So they recently came out with a home equity product that basically cuts down the time in half of a normal home equity line process. It kind of takes us out of it. We have a construction team, one-time close construction. We have a reverse mortgage team. So they're constantly looking to not only put these products out there, but how do they make them better than what currently exists?
So the products, so the products that you guys offer far exceed a simple home purchase.
Absolutely.
Right.
Yep.
All right. Well, based on the outfits you guys have on, I think we should go have Mai Tais.
I'm in.
Sounds good to me.
Thanks for coming. I appreciate it.
Great.
Thanks for the
Thank you
invite.
so much.
Okay.
Appreciate it.
Bye-bye.
Bye.